Hello guys, this is the first video of my free trading bootcamp, and in this video I'll talk about the market structure, which is like the base of my strategy, the most important thing. And if you understand it correctly, you could even trade only the market structure, which I do not recommend, but you could do it because it's very important. And yeah, okay, so let's start. Before I start showing you some examples, I will explain what premium and discount is, because it's also pretty important in this case. So what it is in an option, if you measure a range and the price goes below the 50% of a range, it's basically a discounted price, which means that it's a pretty good spot to start looking for longs, continuation longs. And another example right here. So under the 50%. Then in a downtrend, it's the opposite. So if you measure I use the gun box, but it could be a fib, and 50% is the red one in my fib. So here, discounted price, looking for shorts, continuations. Here, same. And yeah. So let's start with the market structure. What I do, I usually start from the higher time frames, which is like the weekly, daily, 4-hour. And I will show you the weekly on Nasdaq first, because it looks pretty clean, and it will be easy to explain. Let's start from here. So what I do, I look for like major zones. So this would be like a major zone. After breaking it, I would start looking for shorts only in the discounted area. And yeah, we broke another significant level here. Then let's grab the gun box, and here we could have gotten this beautiful trade, because as I said, in a downtrend it's above the 50% of the range. Okay, so let's continue. Here, this isn't really a major level. If you use like a basic market structure shift, you would probably say that it's a break, but it didn't really even go to the 50% of the range. And as you can see, it went to the discount, and then instantly we had a reaction from like a POI of some sort. In this case, this was like a liquidity grab, brink, whatever, sweep. And yeah, then let's come here. Important zones would be this. Here I would still probably be looking at shorts until we break this, or even this. And as you can see, even with the market structure shift, I mean, we went from a downtrend to the uptrend here. But even though we could say I would be probably wrong here, we could have gotten some really solid trades here. Even here, I would probably break even pretty soon. Then after breaking this level, I would start looking for longs. Okay, so we broke this level. Still, it's another thing. I would be looking for longs even more right now. Then 50%, we tapped into a POI right here. Beautiful long. If you only like focus on this structure, we would probably say, okay, it's a downtrend, but it's not. It's only a correction. As you can see, it's very slowly going down, and when we're going up, it's pretty fast. Another sign of of the direction basically. Okay, so then we broke this monthly probably zone. Okay, then we measure the premium discount again. Okay, we tapped into the discount. We swept something here. Here we had like a POI, another beautiful trade. Okay, same thing here. From this part, I would be starting to look for longs. Swept this low. Here was probably like a POI or something. Another beautiful trade here, but it wouldn't be that valid because we didn't have another break, but still only tapped into the discount of the range. Another beautiful trade. Okay, so here's mostly like a consolidation, slow pricing. Then we had this big crash. When we zoom out, we have this monthly level here, which is like the main level here. And when we grab our fib, as you can see, discount here, we tapped into this level and we rallied again. We had this liquidity zone right here, and from then we only had a uptrend, so from April basically. And same thing if you go to the lower time frames. I mean, daily, not lower, but still discount, POI, right? In this case, we didn't get the discount. If we went to 4 hour, we'd probably get some, but the best setups are always from the higher time frame. As you can see, discounted price, crazy reactions, pretty easy trades, even if you traded something basic, even like normal SNR or something. Okay, another example right here. In the discount, POI is working. Obviously, you can still be pretty much sure that it's going up. Okay, then we had this crash. Still, it's not like a solid break because we only tapped here and then rallied up. And if we measure this range, it just tapped into the discount. Then another discount tap right here. We just tapped it, went to my levels, and rallied again. So basically, this is how I look at the structure. And let's go to another pair, Bitcoin. So the first trade was not like a high probability one for our POI. And as you can see, we had like a lower time frame breaks here, only lower time frame, so it was a bit odd to take shorts here, but I did. Then on the higher time frames, break here, and slowly price getting into the correction. What I mean is that the down movements are very fast and the corrections upwards they're slow, so it's like a sign of a downtrend. Here, very solid trade which I didn't take. This liquidity grab here, sweep, whatever. Then another trade that I took, a hidden base right here after the break. As you can see, discounted price and POI only tapping in, and it's a banger trade. In fact, this is one of the best trades of my life. So this is how I determined the direction on the market structure on Bitcoin. On the daily, this is how my analysis look. This I didn't consider it as a break, even though there are some levels here. As you can see, we only tapped into the discount and then rallied. But then we broke this right here. We didn't react to anything on the discounted price. Broke it here, so I could have gotten some shorts here. Then we went back into the range. 50% here discounted. Liquidity grab, another banger trade. And in this case, it's a bit like of a consolidation. So I didn't really take longs here, even though there were levels. This is like a plus POI. And yeah, let's go a bit backwards. Okay, so as you can see, this whole downwards move is basically very slow. Look how fast the price went from here to here, and then let's go like this. So basically the correction was like twice as long and it wasn't even that deep. So it was like a sign that it's gonna go up. It's only a correction. And now here again in the same amount of time, basically the same amount of pips. Slow downward movements, and again fast rally. This is how the market works. It's either consolidating, trending, or correcting. So the corrections are always slower than the trend. Let's go to like another pair, GPUSD. Okay, so we had this is lower time frame. Let's go a bit higher. Okay, so we had this uptrend, first break of a major level here. I don't think we didn't tap into the discount of this whole range, but if we measure it from here, it would be in a discount, breaking all these levels. From this range, discount again here into the POI, here again, and we're only breaking important highs until this liquidation sweep or whatever. We had this break, then I wouldn't really measure it from the wick probably, but it only tapped it perfectly, and yeah, started going down again, and we had down movements for a while. Then let's measure, yeah, discount here, it was consolidating, and we had the downtrend basically until this break, because I would probably be looking at shorts here, but still it didn't really move. It was like a consolidation. I wouldn't really trade it. Okay, another break here. I would be looking for shorts, either measuring from this or from this. Discount here, and it was also aligning with my levels. Liquidity here, some sort of POI probably. Here's like an imbalance for value gap or whatever. I don't really use these names usually. Again, tapping into the discount. tapping into the discount, beautiful trades. And then here we're probably gonna change the direction again if we break this. We didn't for now, still looking like a bit mid, but I think we will break it eventually. Let's go to the dollar. So on the daily it's pretty clear. Always tapping into the discounts, then going down, tapping into the discounts. No major breaks. And then we started breaking right here. After we broke this one, then this one, this one. It was a market trend change basically. Yeah, on the higher time frame, if you always look at the higher time frame, it's very clear. In my opinion at least. When you start measuring the discounts and start looking at the major breaks, you can have a pretty clear bias where the price is going. Obviously the markets are wild and you never know, but it's a very good edge if you know how to use it properly. Okay, let's go to the USD. Even if you zoom out, you without even marking all the levels, you can at this point of the video I think you can already see when the structure is shifting. So basically when we start reacting from like some levels on the discount side, let's say this, we didn't tap it right here, but this is discount of this range, reacted from whatever level this is, then we wanna measure this range. This would be the discount if we measure the whole range, not tapping. But as you can see clearly, we're breaking levels, and we're breaking lows, and we're not breaking any major highs, only lows. And we only now started actually breaking some more important highs, but it still isn't looking very good, to be honest. And yeah, JPY. The blue lines, this isn't structured, this is liquidity, which I use like mainly like a bonus, not like a main thing. But you can see how long this whole move took. And only looking at it, I would probably think after this break that it would go down. And then if you scroll a bit out, it tapped into the discount of the whole range, tapped, swept this liquidity, and then rallied very hard. I even traded it. If you are in my Telegram or you follow me on Instagram, I traded this whole move. And then we started trending to the downward, and we didn't really have much corrections. Here was discounted price. You can already see like a pattern that if you measure the discounts, it's very clear where the price is going. Let's go USD CAD. Same thing again, man. Same thing over and over. Discounted price, some sort of POI, and it just rallies. Now it started consolidating, so I'm wouldn't really try this. What pairs do we have? Euro, GBP. It's a bit messy, but if you go to the 1 hour, it starts to become a bit more clear. You can see we broke this level, then tapped into the discount of this zone, swept this this high, tapped into this POI, another sweep here, oops, then major low break here, discount, and yeah, look at this, nearly perfect all the time. It depends if the range is big. If it is, it usually goes a bit higher than the 50%, like in this case. And for example, this case, that's why I have these other levels, which I will probably talk about in the future videos, which I also use pretty frequently. Okay, so also I already broken down the trades on gold from yesterday, but let's talk about gold and the structure. So let's go a bit higher time frames. It's pretty hard to determine the pivots here. So let's say this, tapped into my levels, swept a low, tapped into a POI, which in this case is an imbalance. Same thing here. Even here, even if you measured, no, never mind. But as you can see, it in an uptrend, discount always react to the levels. On gold, I'm not sure why would anyone try to short it. Only like maybe like short term, but it's still, if you try to short in an uptrend, it's like going against the flow. I would not recommend doing it, especially if you're like unprofitable, because not unprofitable, because even if you're profitable, it's not really right to do. But if you have experience in trading reversals or like small moves, maybe, but still I would never recommend doing it. Okay, so even if we zoom here, we break this zone, we tap into the discount, and look at this. Not even a candle close below the discount. It means that the trend is healthy and that it wanna go up. And yeah, at this point, I think you already start getting what I mean, and how I look at the market structure. I don't really use a normal BOS market structure shift. I don't really do that because it's a bit pointless. What you need is the bigger perspective, looking at higher time frame levels, breaks, where we are in the range, because on the lower time frame this looks like a break, downtrend, whatever, and on the higher time frame this is just a correction, tap into a POI, because obviously the market cannot go infinitely in one. I mean, the market can do whatever it wants, but it almost never goes straight up or straight down. Always we have to have some sort of corrections. And yeah, you can catch very nice trades using these two things, the discount and the market structure. And yeah, if you have any questions, let me know in the comments, and see you in the next one.